is. Welcome to the midweek trading room. Let's get to the midweek update, I should say. It's the 20th of July. Joe with you here on a Wednesday. As always, let's take a look at what these markets have given us. I'm going to give you my 2 cents. You guys are going to share, and we are going to enjoy this class. Just take responsibility for the outcome of anything you decide to follow along with. So, let's get into a recap, because the markets have actually given what I see as a tradable pattern. Yes, folks, for the first time, I've seen a tradable pattern. So the markets test the upper resistance levels as we move deeper into earnings season. I'm not sure if this was a catalyst or not. There's a couple of that came out that did surprise me. A lot of the banks, Goldman Sachs, New York, Bank of New York, did pretty well. So it was pretty interesting to see that. Netflix up a little bit today. So we'll see if that continues. I'm not sure if that's the total catalyst. I think that these markets are just kind of sick of inflation. So I'm seeing inflationary data. It's causing less reaction in the markets. The CPI, PPI numbers come out higher than expected. The markets had a little bit of a knee-jerk, didn't seem to care, shrugged it off. And here we are higher for the day. Now, I noticed most of this towards the end of last week. Friday had a nice little gap. Monday was a little controversial. I actually did the end of day on that day, and I saw that we actually gapped up thinking that we're going to follow suit with what Friday's close was, and we actually came back down pretty consistently. But yesterday, complete different story, and today we're actually showing a little bit of more confirmation through some resistance levels. So, sentiment is still bearish, but we do have some signs of bottoming. And I've got a slide to actually end this recap here, folks. I called it opportunistic. Because if you truly believe that, hey, I can sit through the pain through the summer, this sideways stuff, maybe we establish a range or get one more corrective move, which I truly believe we will. I don't know what's going to cause it, but I think we do. But, talk to me at the beginning of 2023. Yeah, you should be in a better place. And at least that's what I'm seeing some of the investors do right now. So we'll see if that's going to continue to, trade that way. So, what do we know? We've known it forever. Inflation remains high. Fed remains hawkish. They're not going to stand for it. Okay, we've heard the story. We're on track. We're going to raise rates. We've also seen the dollar do extremely well. Parity with the euro dollar. I'm not sure where it's at lately. I haven't checked it over the last day or so. But yeah, so we know that the dollar is going to get super strong if inflation continues and we continue to raise rates. That's great. Signs of slowing in the housing and manufacturing. Manufacturing was a couple of weeks back, folks. Some of the numbers that I saw, we'll get into them here in a second, yesterday and today, housing is slowing. That's good. But the consumer's still steady. And I truly believe that the consumer price index, I think a lot of it had to do with a active consumer. Still buying gas, still paying for groceries, still totally fine, and still, like I say, very active. So we'll see if that slows as well. Now, we need the consumer to stay consuming, because that will give us that soft landing. And I've already seen a couple of articles out there about, hey, what recession? We'll see if it's going to hit, so on and so forth. If we can continue to spend money and be active through the summer and kind of weather the majority of this storm, we're already seeing gas prices come down. If we can get a little bit more on the food side and rents and mortgages, we'll see if that holds true. But, hey, glass half full, I guess. So let's get into some trade ideas. A bunch of stuff on the bull side. I'm not sure if you guys have been going through your watch list, but what I've found on mine is all of my bears are actually setting up for decent breakouts or retracements, a little bit more than just a bear rally. I got a couple of neutral trades here that we've carried forward for the last couple of weeks, SO and Roku, right? I'm going to show you these because they're at the upper levels. Well, actually Roku is, where it could be something that might break out to the upside. But if you truly believe that we're going to subside here, and this resistance will hold, these are good opportunities sideways. But take a look at the bull side. STNG, Chewy, Goog, we talked about all these. The spiders itself, right? SPYs are actually, it's good trade. Even good old Kathy Woods is back, ARK. And I was reluctant to show it, but it's actually a really good pattern. Apple, stuff like that. Now, I didn't put a bunch out there. We'll take a look at a few. Keep in mind that I believe I talked about STNG yesterday on the end of day, so I'm just going to skip over it. It still looks good, by the way, folks, if you like it. So I'll jump into Chewy. Well, let's find out what I'm going to jump into. So here's our first trade, this Chewy, and I do like it. I still like it. I've liked it for a while. Now, folks, we were talking about this last week right here, and it was actually a lot more green than it ended, because during class it was, right up around the 45 level. But I still like the little bit of the arc. Talked about, hey, a breakout, maybe a diagonal spread, a vertical spread, so on and so forth. Even with this price action here, it's still a pretty good trade, and I do like it. I do. It just kind of revisits this level that it hit beginning of April, or I should say end of March, beginning of April, and it's just saying, hey, look, I'm going to stay above the 40 mark. Now, I still like the diagonal spread here. I don't want to get too ambitious and think it's going to hit 50, 55 anytime soon, so something diagonal, something sideways, I'm completely fine with. Or if you guys want to slow play this and do some sort of a credit spread, hey, as long as it stays above $45, I can do, my bull put spreads, any sort of a condor, stuff like that. I'm totally fine with that. So, what's cool about this is with the markets continuing to show signs of bullishness, all of the sudden we have not only 1 week trades, but now we can go a week and a half, 2 weeks out. Now, we are in earnings season, so just chalk that up. I'm not sure when this announces or if it has, but keep that in mind. But it's neat to see when the overall markets are giving us a sustainable pattern that we can trade for multiple weeks. It actually kind of relaxes me as a trader, and I'm more willing to hold on to more of a bull here for a longer term and being able to absorb some sort of corrective action without being too, reactionary or scared. All right, so moving on to Goog. This one's pretty sweet. Nice symmetrical triangle pattern. We're seeing strength come back in to the techs. That is for sure. In fact, it is the strongest sector so far this week is the tech sector. I do like this little symmetrical triangle pattern going on. More importantly, if that's kind of a reach for you guys, let's just focus a little bit on these rising lows. That's totally fine. Volume, pretty decent overall. This seems to be a stock that looks pretty decent. It seems to be a stock that seems pretty popular moving forward. So let's see what it does. If you are a little bit reluctant, you want to wait, then let's wait. Let's wait for this thing to get to the 120 level, and then you can play it as a breakout to the upside, a little bit more aggressive in direction. But for now, how about a targeted butterfly at 120? That'd be a pretty sweet trade. I like it. Moving on, let's get into Apple. That's right, I'm picking on the tech sector, aren't I? It's pretty easy to do, guys, because these patterns are sweet. If you're a guy that just trades complete technicals and tries to quiet all the noise, then this is definitely your market, and it's kind of emerging. Now, the targets aren't too exciting. I definitely think that there's going to be resistance hit here at the 155 mark. You could see way back here at the end of February. It had a gap down and then came back up, so on and so forth. That's fine. We're cool. It's diagonal spreads. Reaching targets back up to this level here at 170, it's a little bit optimistic. You could even make the argument of the crossover that it had here beginning of May. So, however, throw a dart. If you hit the board, you're making money. So 170 ambitious, 165 also pretty ambitious, 155 pretty realistic, thinking that these markets are going to stay pretty strong for the shorter term. Next week, 2 weeks, yeah, something between 150 155 for sure all day long. It's kind of nice. Let's jump down to the sideways stuff. SO still showing some pretty legitimate sideways trading. Now, this has been on this is 2 weeks in a row I had this, and I got to count back 6 days. So 1, 2, 3, 4, 5, 6. So this is where we talked about it last time as a very good candidate to sideways. Now, gap down along with everything else that day, or on Thursday, came right back up, and look what it's been doing ever since. The volume is actually kind of, I don't want to say spiked, but it's increasing. But this is just stuck right below its 50-day moving average. Great trade, still looks really good as sideways. For you guys that are thinking these markets aren't going to go too far from where they already have been, right? Good. Now, Roku, this is a sideways trade that we've been looking at. We've been trading as well, or talking about, but it's looking a little bit more, optimistic. Here's why. Let me get the lines. The 100 mark, it's held. It held a couple of times, and we talked about, hey, this has definitely got a range between 80 and 100. However, this last pivot points, these last few have, oh geez, that's not fair of a line there. Let me try a little bit less of a move, but they are increasing. Volume is very difficult to tell because it's a little bit squashed due to what happened back in this area. But you could zoom in and see that there are people willing to buy this at this level, and today is absolutely no exception. Not sure if it's earnings, not sure if it's sympathy with the earnings, but if this does hit its head once again like it did in the past couple of times, then we're right back into the range. The only thing that we're seeing today is a move to the upper side of the range, which means sideways is still pretty decent for Roku. So I'm going to keep it in the sideways for now. And if you guys want to do something sideways, I'm totally fine with that. If you want to do something that errors to a bullish move to the, or breakout, I should say, go for it. I'm totally fine with either one of those. All right, now on the bear side, guys, I looked through my bear lists, and every single one of them had some really good breakouts, and in fact, a few of them actually established a more bullish move than bearish. But there are some that are just underperforming, and Newmont's one. I truly believe this is directly related to the strength and anticipation of the continued strength in the dollar. So the basic material itself, gold, I'll show you here in a second, is not really going anywhere. We took a look at this last week. 1, 2, 3, 4, 5, 6. This is the day we looked at it as confirmation of a move to the downside, and I still love it. I still love it. Now, what you can't see here, guys, is if I go all the way back over here, you'll see some support levels where this is actually starting to break. The volume is actually correct. It looks good for continuation in this direction. So it is a nice one. It's bearish. It looks good. It looks like it's going to continue to be bearish. All right, let's get into JP Morgan. I just got done saying earlier, folks, that the majority of banks were doing pretty decent. New York Bank, Goldman Sachs, I mean, they're doing okay. This one is struggling. Now, I'm not sure if, I almost tried to scroll down, guys, if this had earnings or not, but it's just really pinned below that 115 mark. And what I like about that is we don't have to be very aggressive to the bear side. In a sector that should be weak, with interest rates rising, you'd expect people to be less active in their banking, less loans are taking out. I don't want to buy a new car, I don't want to buy a new house, so on and so forth. Although JP Morgan's more specifically to investments, but it's still a bank. It still generates its revenue based on interest rates and loaning money. But if it can't get above this, this might be something to credit. So sideways to down below that 115 mark. And I do like the fact that we have a huge fall off in volume. It tried. Look at that. And then just kind of getting bored. So that's where we're at when it comes to some of those trades that we've been looking at over the last couple of weeks. It's been really interesting, guys, and it's been fun doing the end of day post Monday, Tuesday, and then coming into this class on Wednesday, because this is what I do all day. It's just now I get to share it with you and really explain to you how boring it can be. Right? Okay, so let's get into the market analysis. What we are seeing is just higher lows and a breakout above resistance. So take a look at the diamonds, the Qs, the spiders, and we are just definitely stronger. Folks, this is only Monday, Tuesday, and half of today. That's what you're seeing there percentages-wise. If you guys are wondering where I'm pulling this from, it is just Monday, Tuesday, and Wednesday combined, and it's a pretty good move. So let's get into the charts instead of talking about the percentages. This is what I like. It's an absolute breakout. And if you don't want to call it like let's call this a head and shoulders breakout, right? I'm going to give you this big old head and shoulders. Or you could call it a base breakout between the two vertical lines here. Basing breakout. Once again, I don't care what you call it. It's above both moving averages. It's above resistance, and I mean it could definitely turn back over and continue to the downside. But in the short term, this is a pretty bullish move, and that's about all I can get out of that. So If you guys are thinking about making a trade over the next couple of few weeks, I would err to the bull side. This could easily hit the 400 mark and we could fall back apart. You guys know all the horror stories. But where the markets want to go is definitely to the upside. Diamonds are the same. You could see here that this actually does have a slightly lower high. And I talked about the expanded range before. This isn't quite there yet, but it might be, right? So if we see this high increasing and these lows increasing, we could see a little bit more volatility coming into the diamonds. Now, why would that happen? Well, they're energy and utility specific, right? Along with materials. So the most volatile things out there are those. However, where it's sitting right now is above its 200-day moving average. Get rid of these chicken scratches. Or, sorry, the 50-day moving average, and it is breaking above resistance that it's set back mid-May. Last one we'll take a look at, of course, is the Qs. This is definitely the strongest when it comes to its percentages, and it does have the cleanest ascending triangle pattern through resistance. In fact, this bad boy toyed with it the last couple of times that it set its little higher pivots. So it's looking pretty good. Got a clear target here at 310. Let's go back to what I want to lean towards, guys. Shorter term, the next week and a half, 2 weeks, got to be bullish. Got to be bullish unless something really changes on the front of earnings or something really, really disappoints. So I don't think I'm going to carry this all the way up to the 370 mark. I'm not going to be in anything super bullish for the next 3 months. But the next couple of weeks, yeah, I could see it. All right, let's get into the economic reports. Super light, by the way. Not a lot to go off, but this is what we have. Home builders index down, building permits down, housing starts lower. Now, what I mean by that, folks, is just from previous. You always have the median forecast. Looks like they came in a little hotter when it comes to building permits based on the median forecast, but it is still down from previous, and that's expected, and it's going to continue, and it is going in the correct direction. Existing home sales actually came out at 5.12 versus an expectation of 5.36, which is down once again from previous at 5.41. So moving in the correct direction. What the Fed's doing is working, and that's great. We just want to see this go slow, not fast, right? We want a soft landing, not a hard landing. Now, we do have some left for the rest of the week, and it's not much. We've got the jobless claims, a manufacturing number, which we know is also getting lower. And some leading indicators. So past that, not a lot to go off of. Now let's go ahead and pull the glass and see what you guys are thinking about for the rest of the week. Let's see if I can do that. Okay, now it's launched. All right, so here's the poll for you guys that are not on the class, and you could watch this poll move in real time. So overall, I mean, you probably already know where I'm leaning based on what I'm seeing in the markets and the charts. There is definitely a little bit of optimism there. There's definitely a lot of ignoring the bad news. These markets were so afraid of recession and so scared of interest rates and inflation, and they just got bored of it. And when the markets start to get bored of things, they can turn it around and they can price it in. So that's kind of where I'm at moving forward. All right, so got 86%. Oh, there's 93. Not too many people attending class today, so it shouldn't be more than a couple more clicks to get everybody. But you don't have to vote if you don't want. All right, that's pretty good. We'll stall it here. 93% after a minute. Cool. Let's close this poll and share it. And there it is, guys. Definitely looking at a plus one. 85% plus one, 23% zero, and only 8% at a negative one. Excellent. Thanks, guys. Appreciate that. Okay. So you'll be shocked to know that I am exactly the same way. And I score this very, very simply. Above the 20-day moving average, above the 50-day, the slope, we got one turning up, the other one's about to. I'm definitely a plus one in the short term. I could actually justify maybe a plus 1.5 in the short term. without any sort of bad news. We are in earnings season, but so far, traders have been jumping on it. They've been using it as an opportunity more so than being afraid of it. Definitely +1 on the monthly outlook. I have to be, just based on my top down. All right, thanks, guys. So let's get into our sector analysis. And lo and behold, everything's up. Everything's looking really good. The only thing that is not participating yet is utilities. It's been a lagger, I think, because it was such an outperformer for so long. But take a look at tech. 6.64%. What was the one that was getting slaughtered is the one that should lead on the bounce, and that is exactly what's happening. We'll see. There's some more tech companies coming out. Tesla, I believe, is coming out tonight. We'll see what that happens. But Netflix was pretty impressive. So we'll see if some of these tech companies can actually render some money or say, hey, even though we got hurt, we expect future growth down the road. It'll be pretty interesting to see. So strongest and weakest was technology and utilities. Tech, you can see beautiful pattern. This is another tradable pattern, by the way, folks. XLK is something I didn't put in the bull watch, but if that's something you want to trade, it's actually a pretty good setup. It's confirming now today. Short-term target about the 140 level. If you still are worried, and I want to echo this because I know I've been kind of leaning towards the bull side lately. That's totally fine because of what I'm seeing. But if you're still kind of worried about the whole motion of the ocean, I mean, we're still technically in this just breaking out of the down channel. This is the argument that I'm making, is this move is a much different from this one and this one, even this one here before it broke below, right? So could be a little bit of that, like I said, a head and shoulder pattern, a little bit of a correction in the shorter term. So target of 140, 145, and then the markets fall apart. Fine. We don't need to confirm and jump into this thing through the end of the year and into next. We just want to play the next week or two. So, but it is a good chart, isn't it? That could also be played. There's a bunch of them like this. Now on the bear side, we got utilities, and it's just not participating. It just really can't gain any traction. So if you truly believe the recession's coming, if you're truly, this is for my bears, then this is a great place to be. See if it's going to break below the support that it's set. Oh man, that's a tough one. A couple of days ago? Nah. Let's go to, I was just going to talk about this area here. Or you want to see it break a number on the chart, like 68, target this down to 64.5. You can look all the way back here just to pull your eyes, guys. I'll draw some lines where it pivoted as well. So it's about ready to roll over if we really are going to get bearish and you guys think that it's going to get bearish moving forward. So kind of a good chart to the bear side. Real quick, let's do a conclusion and then we'll get into the markets. Support holds as the markets are now moving above their 50-day MAs. That's right, folks. When I do my top down, it's very simple. And I was surprised that I had to change the 20 and the 50 to above with little green boxes. Something you don't really pay attention to until it's in your face. So yeah, I have to be bullish. So the bearish, there's still bearishness out there because the long-term trend that I drew, but they're opportunistic, and I'm seeing buying coming into these overbeat down stocks and comfortable buying. ARK was on our bull, right? Kathy Woods, and I tease, but it's a beautiful breakout pattern, and it's moving higher, and there's a lot of stocks out there that have been beaten down that are showing signs of opportunistic buying. Could it be based on the earnings? I'm not sure. It's too early to tell, but we're definitely establishing some sort of a bottom or low. So economic data is super light. Earnings season continues and could create some buying interest. We'll see where it goes. We'll see where it ends. I do think that's the main driver. We don't have a lot of economic data unless something comes out of us from left field. All right, guys, let's go out and take a look at some trades. Anything that you guys are looking at, please share it with us. I don't see a whole lot. I understand why there wouldn't be. We are in earnings season. It is summertime, and these markets have been pushing and pulling. But take a look at where we're at. The Dow comfortably just above break even. NASDAQ really took off. I think a lot has to do with Netflix. Let me take a look at this heat map. I do think that Netflix is still high. We'll see Amazon's doing pretty well today. Tesla's looking optimistic. It does have earnings this afternoon, so keep that in mind. All right, guys, let's get into some of your questions. Oh, so Scott says, Do we have a GDP report coming up next week? I think we might. I didn't see it this week, but I think we do next. We'll see if we're in line with the expected inflation that the Fed wants us to be in. It'd be interesting to see if that actually comes in a bit lower. So we'll take a look at that next week. But that is probably going to have some sort of an impact for sure, Scott. All right, James got a couple of trades to look at. Or, geez, just one. Okay, good stuff. Sometimes these classes are harder to teach than others, and the reason being is sometimes the markets just aren't conducive to trading, and this week's been one of them. So let's take a look at CNC, though. It needs to base a little bit longer, but it looks good. That's what James said. All right, James, let's take a look at it as earnings play. Okay. Or has earnings. Sorry. Okay, so he's sharing, but he says he has earnings. Let me draw a couple of lines here. I like the channel. I like the breakout. I like the retest. Let me roll down and see that. Oh yeah, it's got earnings coming up on the 26th here before market. That's okay. You could do a lot of trades here, folks, when it comes to pre-earnings. I do like the fact that this moved out and broke out the last few days, really participating with a market. Healthcare is one that's actually come out as being one of the better sectors. I don't want to say the strongest, but it's one of the better sectors. So if it can sustain itself and hold, this is something that you could play going into earnings. Now I know that's only a few days out, but James, if you really wanted to, you could play it even moving higher, right? It's a very difficult trade because you just have the earnings coming soon. So take that for what it is. Now that I think about it, I'm not sure. If it's got earnings on the 26th, this might be something to see how it ends the rest of the week. Because if it could retrace the majority of the move that it had up, then this might be something that you want to split. Meaning, hey, okay, I'm just going to do an out-of-the-money vertical spread to the upside or one to the downside and flip that coin. Past that, I mean, it's too early to tell. If I was to play it between now and the 26th, which is only 6 days from now, I'd probably play it sideways to up. How's that? Cool. All right, folks. Not a very involved class. I understand why. We're in the middle of summer. Summer trading is tough. We've got these markets that have corrected. They're breaking out of lows that they established on a bottom. So we got a bottoming market right now, and so trades are going to be they're going to be far and few between. However, let's go one more time to just trying to give you the breakdown of what I see here. I truly think that if you're going to make an error in the shorter term, the next week and a half, do it to the bull side. Just make sure that you are dodging earnings, and I think we'll be good from that. Okay. Oh, look at this. As I'm about to end class, we have a couple more pop out. Matthew's got FNKO. Did I get this right? We got an ascending triangle pattern. Thanks, Matt. He's like, I figured I'd throw something out. I appreciate it. What do you got here? 2326 only has monthly options. Your thoughts for a dollar? Thanks. August 4th are the earnings. So yeah, you've got some times here, or some time here. Diagonal's tough because, like you said there, Matt, does have diagonals. This might be something. I mean, excuse me, only monthly expirations, so a diagonal becomes pretty long. This could be pretty cool, though, with a vertical spread. I wouldn't be mad at that. I mean, if you've got to go to August anyways, right? July expired last week. So you've got yourself 3.5 weeks. Yeah, 3.5 weeks. Maybe an aggressive vertical spread. You know, you will have to carry it through its earnings, obviously, right? Which is the 4th. But that might be beneficial. Or you could just try to do maybe a straight call on this. Just do a straight call, and once it reaches the target, you scalp it. And that could be before earnings. That'd probably be your best bet. Probably a straight call on that, or just carry this thing through its earnings and do a vertical spread through August expiration and kind of grin and bear it and say, I believe this thing's going to be 27, something like that. But it might be something kind of fun. Cool. Thanks for that. All right, so Mesbin, let's talk a little bit about that CNC. She's saying I was going to enter it today, but I decided not to because of the bearish candle. I agree. Sure, it's hard to get into something bullish when it's pulling back, but what's really cool is I love the shadow today. So I like that. And she's thinking of a bull pattern 82, 89 for July 2022 expiration. Oh, just for the next couple of days. Yeah, I'm okay with that. Yeah. See if it can hold. See if it can hold at that 89 level. And yeah, you could carry it another week. She just typed in, folks, saying, hey, yeah, maybe another expiration. Sure. Let it give you a better pattern, a little bit more solid of a pattern, increasing your probabilities before you could throw a dart at it. Yeah, not bad. Okay, Ronald's got something. Let's see. LCID. Zoom in on this. I keep reading here. For the next 20 days, what do you think of a bull pullback? I think a bull pullback on LCID for the next 20 days? Question mark. Let's see. I like this. Let's draw this line. This is kind of cool. I love this. I like that a lot. I think this might just kind of march its way up to 22. Now it's not too far because it's almost at $21. However, yeah, he's saying that maybe it pulls back again, and it definitely could. But if you wanted to play something like a diagonal on this, based on what I just drew on the kind of ascending continuation up to 22, or if you're really thinking this thing might pull back a little bit, a diagonal spread is a wonderful thing to do. Selling this 22, buying a 20. I'm cool with that. I'm okay with that. Cool. Thanks, Ronald. Kind of a fun thing to look at. It's just tough out there today. Speaking of which, let's just go ahead and scroll down and see if this has earnings. Well, it says May 5th. You'd have to Google that one to find out, to get a little bit more specific. Sometimes Finviz just kind of gives past earnings, or it just averages it out based on what it did last quarter. So, all right, guys. Cool. So just a couple there to look at. I'm not going to get too detailed with them. That's fine. Just take your time. End of July, mid-July. This is a very difficult time to trade. I'm literally leaving on a vacation tomorrow, so the activity in the summer for me is light, and these are pretty difficult, especially when the market's trying to establish some sort of a base. So if you can't find anything, folks, you're probably just not finding anything. It's not from lack of looking. It's just there's nothing out there. So thanks, guys. I do really appreciate your participation, even though there was a super light class today. Thanks again. I really do like it. If you guys have any questions, you know how to get a hold of us, and we'll talk to you next time. See you guys.